Okay, this is how to attempt the manufacturing account for the 2013 paper. So what we're doing is we start off with the blank document. Probably take you about 3 or 4 minutes to lay this out. So the blank structure of the document as it appears. So you've got your manufacturing account, which has direct costs, mainly materials and then wages. And then your indirect costs here, leading to the market value of the goods that you produce. Then you've got your normal trading profit and loss down to gross profit. Other incomes, distribution expenses, administration, financial. So there's your three different types of expenses. And then underneath that, you're going to have your dividends and our retained profit. Balance sheet, you've got some examples here: buildings, office equipment, plant machinery, God knows what they are. Debtors, closing stock, creditors, and then finance by and debentures. Okay, so there's your basic structure. The way we do it is we start with the adjustments down the end. So I'll handle all the adjustments. As I come upon anything up here that needs to be changed, I'll put that number into my solution at that time. So when I'm finished dealing with all my adjustments, probably half of these will be included in here, and the rest of them I'll just need to deal with at that stage. So all I'm going to deal with here is just dealing with the adjustments. So we start off stock on hand, finished goods, raw materials, and work in progress. So work in progress is here, finished goods is up here, raw materials is up here, and finished goods is in your trading account. So there's my three figures. I'd normally add those three figures together, and there's the total, and that's what goes into my current assets. Finished goods figure includes stocks cost 4.4, and now is a net realizable value of 2.5. So it's gone down in value. So it's worth 1.9 less than we thought it was. So that figure, instead of being 79.4, it's going to be 1,900 less than that. Okay. So my closing stock figure here is going to be, so I'm just adding up all of the figures I have here: 79,400 plus 35,700 plus 27,400. And then we have to take away the loss of 1,900. Okay. And putting in my raw materials. So the closing stock of raw materials is 35,700. No change to that. Closing stock of work in progress is 27,400. No change to that. And the closing stock of finished goods, which is down here, is going to be 79,400 minus the 1,900. Okay. Finished goods sent to a customer and sale or return were treated incorrectly as a credit sale. So sale or return basically means I'm going to send you some goods. If you decide you'd like to have them, then you tell me and I'll call them sold to you at that stage. But in the meantime, those goods, even though you've temporarily got them, they're my goods. And I'm expecting those to get sent back to me unless you tell me otherwise. So they should be included in my closing stock. They should not be included in sales when you take it out of sales, and you don't owe any money for them, so they shouldn't be included in debtors. So the recommended retail price of those goods was £6,000, which is cost was 20%. So that means that I would have added £6,000 onto sales, so that shouldn't be included. So I'm going to take that away from sales. So sales is 1,540 up there. So sales here. So it's going to be 1,540 minus the £6,000. My debtors up here, 102,600. Putting that in here. 102,600. Take away the £6,000 from that. Now my closing stock, I'm going to have to take away what they originally cost me. So this figure here is cost plus 20%. So that's 120%. So if I divide that by 120 and multiply by 100, I'll get what they originally cost, and that figure's £5,000. So in my closing stocks up here, I'm going to add on, and those goods should be with me, even though a customer temporarily has them. So I'm adding them to my closing stock. So even though they're not in the warehouse, they're still officially mine, and that's finished goods. So closing stock finished goods. So I'm adding on £5,000 to that. Okay. Repairs to plant and machinery amounting to £2,000 carried out during the year. So that is going to be an indirect cost. Okay, and that figure is 2 grand. So that wasn't recorded properly. Instead of putting it in here as repairs, I took 400 parts taken from their stock. So that means that the purchase of raw materials, some of the purchases was actually used to fix machinery. So I'm going to take that out of purchase of raw materials. So purchase of raw materials is 1035. So it's going to be 1035. And I'll take away the parts which cost 400. And then the remainder represented wages. So 400 taken away from that is 1600. So 1600 was taken from wages. So that's direct factory wages is the figure we're talking about here. So in my manufacturing wages, I'm going to have 180,400 minus 1600 that I had for manufacturing wages. I'm just quickly checking, are there any other types of wages it could have been? I don't see any other direct factory wages. I don't see any other wages there, so that's it. Okay, so I've just taken it away from purchases and taken away from manufacturing wages and add them to my new cost, which is repairs. Provide for depreciation, plant and machinery, the annual rate 10%. Okay, so this is a bit complicated. So there's a number of things I need to do with here. So I need to fix the plant and machinery. I need to fix the provision for depreciation, plant and machinery. And then I'll need to deal with my disposal. And then I'll need to work out my depreciation expense. Okay, and that depreciation expense is depreciation, plant and machinery, which is going to go up here in my trading account. So I have to start off with my plant and machinery costs. So they originally cost 270, it's now worth 180. So my plant and machinery is originally 270. Provision for depreciation is 180 taken away from 270, so it's originally 90. Okay, and what happened? So a machine that cost 20 was trading against a new machine costing 51. So that's going to be 271 minus the machine that originally cost 20 and plus the machine that cost 51. So that's the new balance figure, and I'll put that straight up here. Okay. The depreciation. So to do my depreciation, I'll have to work out the depreciation on the thing I disposed of. Let's do this a bit further down. So the thing originally cost 20 grand. The depreciation expense is 10%. And then I'll multiply that by whatever number of years I had the item. So I got rid of it on 31st to 3rd, 2012. So it's a bit of 2012, and I got it in 2006, so it's a bit of 2006. And then I had it for all of 2007, 8, 9, 10, and 11. So that means I had it for 5 years, and then half a year at the beginning, and 3 months at the end. So it's 5.75 years. Okay, so that's 200 grand or 20 grand times 0.1, which is 10%, and times 5.75. So that's the depreciation I've written off over all the years I had it. Okay, so if I go to my disposal, the thing originally cost 20 grand. I've written off 11,500 over all the years I've owned it. And up here it says I got an allowance of 8. Okay. So that means that I made a loss of 500. So looking at the top here, it originally cost 20 grand. G8 is this depreciation. So that means 11.5 was taken off the 20 grand. So it was worth 8.5 grand. I got 8 grand of a trade-in for it, so that means I made a loss. And that's going to be an expense. So, and that is because it's to do with plant and machinery, so I'm going to squeeze that in up here. If it was something like a loss on the sale of a van, then I'd have that down here in distribution expenses. Okay, so I need to work out my depreciation expense for the year. So first, I had all vehicles that I sold, and that thing I sold was worth 20 grand, and that's going to be multiplied by 10% depreciation, and then whatever, and this is just depreciation that happened during this year, so it's going to be part of this year. So I got rid of in 31st of 3rd, so I had it for 3/12 of this year's quarter. Okay, 3/12. Now, so 10% of 20 grand is 2 grand, 3/12 or a quarter is 500. So the second thing that I'll be depreciating this year is our new. So the new thing cost me 51 grand, multiplied by 10%, and then I multiply that by how many months. So I did the changeover on the 31st of 3rd, so I would have had that new one for 9/12 of the year. So it's 51 grand times 0.1, which is 10%, and then times 0.75, 3/4 of a year, or 9/12 of a year. No, that's not right. Got an extra 0 in there. And finally, I have the continuing. So continuing the vehicles that I had at the beginning, and I still have at the end. Now, I had 270 at the beginning, minus the one that I got rid of that originally cost 20. So of the 270, I have 250 left. So I have 250 multiplied by 10%, and I would have had that for a full year. So that's 10% of 250, which is 25 grand. Okay, so my total expense is that number, and this is depreciation plant and machinery, which is at 29,325. Now I have to fill in my provision for depreciation, which has to go up here. So my provision for depreciation started off as 90 grand. I'm taking out the depreciation on the thing that I sold, which is 11,500. That's depreciation over all the years I had it. And I'm going to add in the depreciation on all of the vehicles that happened during this year. So the total figure then is 107,825, and that's the figure that goes there. Okay. Notice I'm not doing any maths here, and I'm not going to waste my time just yet because I don't have necessarily enough time. Now, just quickly checking on any of the mistakes. A common one here is they have this in this question. Check for the net amount of the transactions was incorrectly treated as purchase of raw materials. So I'm going to have to reduce my purchase of raw materials because I included the check when I bought my new vehicle. Now, the new vehicle cost 51 and I got an allowance of 8. So they took 8 grand off the cost before I wrote the check. So I had to give them a check for 8 from 51, which is 43. Is that right? Is it 8 from that is 43? Yeah. Okay. So 43 too much. Say 43 was included in purchases. We have to take that out of purchases. So we'll take away 43 grand. Okay. That's that. Suspense. Incorrect figure for debenture interest, although the correct figure will include in the bank account and returns, etc. Okay. So what I need to do first is I need to find out what the correct figure for. There's two different mistakes here. A grand entry in the debtors account and the debenture interest. So I'm going to deal with the debenture interest first. So my annual debenture interest is going to be, looking up here, debentures. Where are my debentures? 9% debentures, 200 grand. So the annual figure should have been 18 grand. So I'll just put in a note there. So that's 200 times 9%. Okay. Minus the amount paid. And what's left? And what's left is going to be the amount that's due. So that means I have to pay that. So therefore, that's a current liability. So up here, I'm going to have a debenture interest due, which I already have it listed. Pretty much every question you'll always have this. So debentures for the first 3 months is listed as 4.8. Well, 3 months or a quarter of that is 4.5. So my current liability is those two taken away. So that's not right. That's 18 grand. Okay. So my debenture interest due is 13.5. Now let's go back and deal with my suspense. So my suspense has been mixed in with administration expenses, so I'll put that in here. So I've mixed in with my administration. Where is it again? So 27,600. I've mixed in my the mistake of my debenture interest. So I put debenture interest, which is an expense, which will be a debit. I put it in here as 4.8. That should have been 4.5. So I need to have a credit here of 300 to make that smaller, which means I'll have a debit here. So I'll be adding on. So we got 27. I'm going to add on to that the 300 difference between what should have been put down and the 4.8. Okay. Okay. That's the first one done. So I now have the debenture interest there. I'll have the debenture interest expense, which is the full amount for the year, which is the 18 grand. What else do we have? So that's debenture interest. And then we have returns of 100 entered only in the debtors account. So that's sales returns. So that's going to reduce my sales figure by £1 grand. So I'll go back up to my sales, which I already have there. So I'm taking another £1 grand away from sales. Okay. Now the figure for bank and the trial balance taken to the bank account. Bank statement showed an overdraft. So basically I need to fix my bank account, and I'll probably need to fix a few other things as I go along. Okay. So the bank account I'll have here, and then down here I'm going to have a bank statement so that I can correct it. So this is now what I'm doing is I'm doing a bank reconciliation, just fixing the statement. So the bank statement at the moment says minus 39,720. Okay, the bank account says up here bank is 41 grand. It's on the credit side, which means a minus. Minus 41. Okay. What mistakes? Because these two numbers should be the same because they're both dealing with my money. This is the bank, what the bank thinks I have. This is what I think I have. So a check for 680 issued to a supplier and entered in the books, in the cash book and the ledger as 860. So that means a supplier is a creditor. And when I gave him a check, I reduced my creditor, but I reduced him by too much. So I have to add on the difference onto creditors. So creditors is 98.2. So up here. So 98,200. I'm going to add on to that the difference, which is 180. And my bank account. Now, when I wrote a check, that would have made it's a minus in my bank, and I put that minus as too big, so I'll have to reduce this bank account by 180. So basically I'll be adding on 180 to my bank. which will make my bank overdraft smaller. So, credit transfer for 800 paid to firm's bank account because of a debtor who's declared bankrupt. So that means I got money. Okay, the bank didn't. Bank knew about this, so I don't need to touch the bank, but I didn't know about it. So I got money. So I got 800. Now, and why did I get 800? Debtor was declared bankrupt. This is first of all paying 20 cents in the euro. So that means my debtors, who at the moment is 96.8. Okay, I'm going to cancel the debt this person owed. 800 is 25% of the debt. So therefore the full debt is 5 times, or sorry, no 25, 20% of the debt, so 20 cents in the euro. So the full debt is 5 times 800. Full debt was 4 grand. So I'm going to take away 4 grand from the debtors. And the difference between the amount I got, which is the 800, and the 4 grand, that's going to be my bad debt. And I put that in distribution expense. And that figure is 3,200, the difference in the two. Next, a check for fees 300 issued to director had not been presented for payment. Well, if I wrote the check, I would have put into my bank account, I would have put into my director's fees account. So the bank didn't know about it. So I need to adjust the bank figure. So the bank at the moment is that. If I wrote a check for 300, that's going to make my bank overdraft worse. So it's another minus 300. So if I, just to double check that I've done this right, so I've got minus 41 grand, plus 180, and then plus 800. So that's that figure. The bank reconciliations says I have minus 39,720 and another minus of 300. Okay, so those two figures are the same. So that's the new figure I have for bank. And it's 40,020. The directors recommend provision made for investment income and debenture interest due. I've already dealt with my debenture interest when it came up in my suspense here, so I don't need to deal with that again, but I do need to deal with my debenture interest. So up here, so my investment interest. Up here, my investments, 4% investments, 340 grand. So I'll put that in my fixed assets. So they're 340. I'm looking here and I'm looking for investment interest paid during the year. I don't see any mention of it, so therefore I'm going to have all of my investment interest I should have got is still owing to me. So that's investment interest due, and that figure should be 340 grand times 4%, and that figure hasn't been paid to me yet, so that means I'm going to have an other income of investment. So, and that's the figure I should have got, which is 13,600. Okay, so that's my investment income, and we'd already dealt with my debenture interest due. And provision for bad debts to be created to 4% of debtors. So my debtors at the moment is this. I have no provision at the moment, okay? So when I create my provision, that will be included as another expense, and I'm going to put it in with my distribution expense, because these debtors, they're people who I sell goods to. So provision. Okay, and that figure is going to be, the debtors is 92,600, and the provision is going to be 4%. So 3704 is my new provision for bad debts, and I'll have that up here as a minus against the value of my debtors. Okay, so now I've dealt with I haven't dealt with factory buildings. I've dealt with plant machinery. I haven't touched discount or profit. I haven't touched stocks. dealt with debenture interest, I've dealt with investments, patents I haven't touched yet, purchase raw materials I have dealt with, sales I have, dividends no, debtors and creditors I both dealt with, bank I have, debentures 200 grand, I forgot to put that in here, so while I was dealing with that I should have put that in here. USC I haven't, and that's on the credit side, so it's going to be a liability. Issue share capital I haven't, and some of the rest of these I haven't. Administration, corporate and suspense, I'm assuming that I put that in here. Administration, I have dealt with that. Have I put the right? Oh, I forgot to put in my debtors. So when I did my suspense here, okay, 1,000 entered only in the debtors account, so therefore I reduced sales. So I put a debit here to make sales smaller by that 1 grand, which means I need to put a credit where my suspense is. So that's going to make my suspense smaller. So I'm going to have to take a grand away from my suspense. Okay, so I've now dealt with probably half of them, and I've got well more than half the marks. Because the numbers I put in here are the trickier numbers. Obviously, if you're doing this with pencil, if I just look, for example, at purchases here, there were 2 different things that I had to put in to change purchases. So I would have probably put the 1035 minus the 400 in first, and then when I realized there's another thing to do with purchase, I would have crossed that off with single pen line through it, don't tip exit, and then put the new figure beside it here so that the examiner can see how you've actually done your change. That's what makes things easier. Well, I hope that makes sense to you.